What's up, traders? Today is Sunday, October 30th, 2022, and today I'm going to cover swing trade strategies for you. Got that request from one of the viewers and decided to put something together, and that's what we're looking at right now. At the top of your screen is the 65 minute. At the bottom of the screen is the 195 minutes. And I kind of put these like that. Uh, the orientation is this way so you can see side by side as we go over various scenarios, okay? And for if some of you are wondering why I choose 65 and 195 particularly is because of the way 65 divides perfectly into a 7.5 hour trading day. 195 is exactly half of that trading day, which is 3 hours and 15 minutes. So actually, did I say 7.5? Actually, I meant, I think it should be 6.5. So nonetheless, this is what you're looking at. And let's get into the the 65-minute time frame scenario. Okay. Recall in my previous videos where I constantly preach the fact that a candle body, not including the wicks, the candle bodies must close above or below the EMA or the SMA lines. So here's the EMAs and here's the SMA lines, okay? The same holds true for swing trades. The same holds true on the 65-minute time frame, and it holds true on the 95-minute time frame. Okay, we're going to get into that. I'm going to show you. Hopefully the screen's not too small, um, and that you can see it. All right. So the 65-minute up here. Let's look at how the candle bodies are hugging, straddling the line, but none of the bodies are clearing the line. Okay. This date is 8/18. Actually, this particular date, August 18th, guess what? That was when Chairman Powell spoke at Jackson Hole. Everyone knows that morning, 7:30 in the morning, he spoke, the markets went south. Okay. Um, so notice how none of the bodies are basically at this point in time, 8:15 to 8:18, the markets have topped. The markets have gone on a crazy bull run since the uh, the June 16th bottom. Okay, so it's basically topping now and waiting for Jackson Hole, waiting for the speech of Chairman Powell. Okay, but when you look at the bodies here, look at that. None of them are clearing the line anymore. And as you look at the MACD, look at that. Well, this is the 65-minute. None of them, they're actually going down right there, and they're now negative. See that? It's negative. And you notice how it's trying to come back up here, the MACD, but it never gets back over the positive. Okay? It never does. So let's uh, uh, let's also look at the RSI. So from this point to this point, it is going down. I'm looking at the tops of the RSIs going down. Okay, so let's go on down here and let's check out. Let's see, 818, 819. Okay, so this is the 195-minute. So yeah, this is the moment Powell started speaking, and so that was lights out. Um, Interestingly, okay, the MACD, I'm looking at the right here. Look at the MACD is also coming down and down and down right here. That's 0.4. So it's still just above zero. It's yet on the 195 time frame, the bodies are clearing the EMA 50. So In this scenario, I would, if you're more conservative, I would err more on the side of caution, right? It clearly, even the MACD on the 195 is going down, as you can see. It's down. It's not up, and it's not neutral. It's going down, right? Even though the bodies are clearing. But on the 65 minute, not only is it going down, the bodies aren't clearing the EMA lines. So I would go conservative, and I would say this is going to go down. So um, and obviously it did go down right here, but that's when Chair Powell dropped the bomb on everybody. So actually it was this morning here, 8:17. Oh, sorry. Yep, it was that morning. That's correct. So um, that obviously is your entry point if you're trying to short options to swing trade, right? Short it because as you'll see here, clearly look at the MACDs well below the zero line, and now the bodies, oh boy, it's it's well below the EMA 50. That's that's just a candidate to swing trade when it's well below like that. That's decisively down, right? Even the 195 minutes decisively down. Now, I remember what happened after a couple of days here too. The markets after the initial Chair Powell discussion were shocked, and it was down for 2 days. It tried to flatten out, as you see here, and actually tried to go on a run again. Okay, I remember this, only to collapse right here. Just boom, the market makers just dropped the tape. Now, if you were to try to swing trade it, if you were, let's say you went short, up here, right here, you're like, oh yeah, we're going down for the next few days. And you see it start to flatten out, and you actually see the MACD coming up, 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 up like this. And you need to try to make a decision. Am I going to hold on to this or should I sell it? Because it looks like it's bottomed and it's trying to come back up. So one way to look at that is so clearly on the 65 minute, right? It's down and then it's flattening and then it's coming back up. The 195 minute, very um, similar pattern, right? But on the 195 minute, okay, look up here on the 65 minute. You do see bodies closing above the the EMA 50 line, right? Okay, oh, well, that looks bullish to me. The 195 minutes did not clear the EMA 50 on the 195 minutes. See that? The bodies never did. They went right up to it, and the MACD never did on the 195 minute. The MACD never did get, look at that, it's right there. I'm looking at that's negative 0.11, right? I'm looking right here to the left, right here, this number. It never did get back to the zero line, guys. It never did get back positive. So if you're trying to be conservative about it, the 195 minutes will confirm for you. It's like, no, it's not going to go on a bull run. And I will also point this out. Let's see. The 65 is not as obvious. It's slightly obvious. There's slight bearish, slightly. I'm looking at the RSI right here, the blue lines. It's slightly, but let's look at the 195 minute. Okay. Look from this point to this point down here in the RSI line. That's actually going down. That's actually going down. I look at the RSI, as you know, quite a bit, and I rely on it to confirm, like, uh-oh. See, this RSI is going down as the price is going up. It's going to fall. It's going to fall. Okay? And look what happened. Boom, it did. So basically, I think the on that in this time period here, the markets were shocked by what Powell said because prior to what Powell said at Jackson Hole, I've been watching every single one of his press conferences. He was so dovish, so accommodative. That's why we went on that June through August run. Is because the markets didn't believe him. They're like, yeah, whatever. You're not gonna do anything to us. I specifically remember that. I was like, come on, Powell. So he finally came out at Jackson Hole, as we know if you've listened to it, just put the hammer on the markets. And so what I think the markets did was, yeah, they dropped for a couple of days, but then they were maybe like in denial. They're like, no, this isn't really happening. But when it was determined on this day in pre-markets that, guys, there were no buyers because RSI was going down, and the market algorithms were trying to pump the prices, right? That's what the algos do. They pump it, pump it, pump it. They pump it up to see if people jump in. But when they don't, they drop the tape. That's exactly what happened. Because how could you pump it up for this day, into pre-market, and then when they finally decided in the morning, like, there's nobody buying. Okay, fine, drop it. That's exactly what happened. But you could see that in the RSI. It's getting weaker and weaker because nobody's buying. So they drop the tape. So I guess the long and short of this scenario is if you were being conservative and you wanted to rely on the 195 to say, nope, the 195 has to cross above the zero line and go back to positive before I sell my short that I bought up here. Okay, that's how you could probably look at that if you were more conservative on your swing trade, right? I mean, you would have still made some profit had it if you sold because the MACD on the 195 went above zero, you would have made a little bit. But if you now in hindsight, now because the 195 never did cross above the zero line and you held from up here when you bought it, you would have made a lot more money because it went on for I think it was seven days I counted at the time. 1, 2, 3, 4, 5, 6, 7. Yeah, it was 7. I remember I counted. I'm like 7 consecutive down days. You kidding me? So so that would have been one hell of a swing trade, right? Had you bought up here and you sold all the way down there, right? You would have held on for a lot of days too, right? So um, you know, as you see, okay, here's what I want to point out. This is a good example. This is the 65 minute. Obviously, the trend is down, right? Down, 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 down. But you see the MACD going up, 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 up. It's because that's bullish divergence. I mean, it's also natural for the MACD to do that because it's got to try to bottom, right? It's not just going to go down forever. It has to try to bottom. Basically, the bottom is at or near the time the MACD hits zero from a negative position. It's at or near. You're within a day, or you are on the day, right? So, um, also I will call out, yeah, it's you are really close when the MACD pretty much hits zero or starts to go positive. You are really close to the bottom. Okay, so I guess that's what I'm trying to say is that's when you should probably think about wanting to get out, sell it, sell your put or sell whatever you shorted from way up here, right? Think about as you see it getting closer and closer and closer and closer and closer to the zero line. Oh, I gotta sell. It's time to sell. You know, so that's basically an exit point for you when the MACD is approaching the zero line again. So let me see. That was 9.92 to 9.6. Here we go. 9.2 to 9.6. Yeah, this is the 195 minute. I mean, since that's a little bit of a slower time frame, it's a larger time frame. The MACD um, is doesn't really get zero until like, well, you're already going up. So um, I would use the 65-minute as a time frame for an exit point. Okay, so I hope that helps. So as you see here, as an exit point, but then turn around potentially as a then you can reuse the MACD as a buying point, right? Because anytime you come from way down here all the way up here, it's time to go on a run again. I mean, you can't just be down that many days without attempting to bottom and to go back up, right? That's just natural uh, market cycle, right? This was actually abnormal. 7 consecutive down days. I think that set a record that hasn't been set since like 2020 or something like that. I saw that stat the day that it happened. I was just like, wow, it just keeps going down. Um, so 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 your exit point of that short from up here now becomes an entry point for the upswing, right? So if you're buying options, now you need to think about closing your put position and opening a call position. Okay, make sense? Okay, so I want to point out on the 195 minute, see how low? I mean, this is weak, weak. This is probably another good telltale sign that, ooh, now that I look back, um, look at how far on the 195 minute, look at how far below the zero line the MACD and the signal line is. That's that is so weak. I'll tell you right now, it's so weak. And that's how you know the market won't bounce on you significantly like the next day. When I say bounce on you, I really mean like there is no threat of a trend change at all. At all. When the MACD is this weak, there's no threat at all. Okay? And so just look at how low the price action is moving below the EMA 50. That is so weak. Okay? You could just sit there and just like, nah, I'm not gonna even bother needing to watch it for the rest of the day. You know what I mean? It's like, no. It's not there's no chance it's going to V-shape bounce on you like that, especially on the 195-minute time frame, right? Because as you know, I mean, just look at the way the shape of the 195 MACD curves. It's very smooth. It's not jagged like what you would get on an intraday chart look, right? It's just up and down, up and down, up and down, jagged look. It's very smooth. So you can just count on there's just no way. There's no way it's going to V-shape bounce on you if you're shorting this when you're trying to swing trade. There's no way. It just can't. It doesn't have the power to do it. It's not physically possible. Okay. So um, now, having said that, as what happened specifically on October 13th, when the CPI number came out, when we dropped 500, I'll never forget that day. We dropped 500 points in pre-market, and we hit the 200-week moving average. We kissed it, and then the markets bounced the tape and swung to a positive 800. So we almost had I think it was a 1,500 point swing in one day. That V shape happened when we've already been going down for like a week and a half. You see what I mean? Like and I'll get to that in a minute just to show you what I mean. We've already been going down though. So it's like we're already near the bottom somewhere. So in that scenario, I can see us uh, V-shaped bouncing. In this scenario, though, remember this was the top after what June, July, August, we'll call it a 2 month bull run. Okay, so that's a totally different scenario than Well, you've been going down for a week and a half and you're somewhere near the bottom already, I can see a V-shaped bounce then. And that's exactly what happened on 1013. It bounced, boom. And so I think that will prove to be that that bounce on 1013 could very well prove to be the bottom for the remainder of 2022. I still think in 2023 we're going lower. We are, but I think for 2022 that could be the bottom. So I'll just put that out there for now. Uh, so we'll call the 1013 bounce a bottom, not the bottom. Okay. So so I hope that makes sense. Let's go through other scenarios here. Let's see. Okay, so it bottomed here. Remember, that's where I left off in the conversation. It bottoms here, and then so that's when you need to, because the MACD is already approaching zero. It even slightly went above it, but then it comes back down again. But see, you notice that these are higher lows, higher lows, higher lows, higher lows. There's a trend change coming. It's bottoming, right? That's how you know. These are higher lows on the MACD, I mean. It's lower lows on the price, higher lows on the MACD. That's bullish divergence. Okay? It's like, oh yeah, it's gonna bottom. That's you shouldn't be messing with puts right now. I wouldn't do that. Nah, no. If the MACD is starting to get closer and closer to zero, don't be shorting it, guys. So that applies to whatever. I mean, if you know how like the discussion of we're gonna break the June lows, or it's like, well, we're getting close, and you see the MACD getting closer and closer to the zero line, inching upward and upward, making higher lows. I would not be shorting that. Don't short it. You're gonna feel sorry. They're gonna bounce the tape on you. You're gonna get short squeezed. You're gonna get gamma squeezed, and as a another YouTuber who I subscribe to, his channel, he likes to say, you're going to get a massive pie in the face. Okay? All right. So um, now you see here clearly the MACD is above zero, is above zero. And lo and behold, what happens? We're going up. We're going up. Okay? So it went above zero on 9.7. Let's look down here, 9.7. Okay, so on 9.7, even the 195 is separating. It's still below zero, yes, but it's separating from the MACD line is separating from the green signal line. So there's strength there. Okay. Now this failure point right here is a little tricky. I think what was on this day? There must have been some news on that day. I can't remember what it was. To abruptly just drop straight down like that. Um, I can't remember what it was. Maybe it'll come to me, or maybe we'll look it up or something. But um, let me go ahead and scroll to the next time frames. So, but before I do that, I mean, when you look at that, that's tough to predict that it's just going to fall like that, because there was nothing in the MACD or the RSI indicators that said, well, actually there was. Hold on a second. Hold on. Hold on a minute. Look at the 195. Look at the RSI. See that? It collapsed in pre-market before opening bell. This drop happened at opening bell. The price dropped. Something happened. I don't remember what it was though. But if I were to go back to that day in pre-markets like I always do, and I would have seen that, I would have been like, whoa, what's going on here? I would have, because me, I always look at the let's see what the RSI looks like. Oh, interesting. Okay. Okay. Well, the 65 minute actually shows it's okay. But I routinely, anyways, I always look at the 195 in the morning. I flip over to it, look at it real fast, just make sure, just make sure there's no funny business going on. So my morning routine is I look at the 95. I start high and go low. 95, 130, and then I have 65 and 30 on my screen all the time, anyways. But I look at the 95, 195, and 130 just to make sure everything's cool. And so, on that day, oh yeah, see that? It just went straight down, almost straight down. So, but I don't remember what it was. But if you're swing trading, you wouldn't have been able to sell until opening bell. So maybe that's your cue. You see something like this? What in the world? Why is it going? Even the MACD started to break down. See on the 195. See that? It started to break down. Wow. That's your cue at opening bell, sell. Because at opening bell, it actually did try to go up slightly. You see that? You see that top wick? It did try to go up. It was a last head fake. It was a final head fake by the market makers before they drop the tape on you and send it straight down vertically. So if you see something like this, the 195 in pre-markets go down at opening bell, don't ask any questions. I would even, yeah, potentially even put in a market order. Don't even try to put in a limit order. Just sell it, all of it, right off the bat. Don't even ask any questions. Don't be like, well, maybe it'll go back up. Oh no, no, it's not. No, it's not. Okay. Okay, let's move on to this other time frame. Let's go on over here. Just kind of go through more scenarios. Let's see. Yeah, it's almost lined up, right? Okay. All right. Okay. This is the last scenario where it just dropped, right? Okay. All right. When it does that, see that? Oh, it just look at the MACD, how far below the zero line it went. It's like, oh, what is going on here? So if you're thinking quickly, moving quickly, sell your that you would have ended that call, right? You would because it was going up prior to that, prior to going falling off the cliff. Sell the call, buy the put. I mean, this is almost like you almost have to have it ready. Like, okay, what am I gonna do after I sell, and then what am I gonna do? I'm gonna sell this, and I'm gonna buy this, right? If you buy the put, um, see, if you buy like okay, sell and then buy, have both of them up simultaneously, right? Just have in your head what you're gonna do immediately. Just sell one, buy the other, okay? And if you had held on to that, well, guess what? Okay, let's right, you held on for 1, 2, 3, 4, 5. It's attempting to bottom again, right? See that? Does it see the MACD line? Coming up, coming up, coming up. Oh, it's hugging the zero line on the 65. Let's see, 919 and 921. Let's see what the 195's doing here. 919. Oh, see, 919 and 921 right here. It's still well below the MACD line, and the price is well below the EMA 50. Here, hold on a second. Let me do this. It's kind of quirky. What it's Yeah, it's hold on. Hold on a second. I need to kind of this program's a little quirky, but I figure out what it's doing. I mean, I'm usually not changing time frames and stuff throughout the day, so it doesn't really affect me much. But I'm okay. All right, that's close enough. Okay, 919. Yeah, here we go. 19 through 21-ish. Yeah, 919 through 921. 919 to 921. Okay, see that? On the 195, notice how the price is still, oh, it's a good ways below the EMA 50. It's below, 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 but look at that. It tried to kiss it. It kissed it, but it wicked down. That means there's still selling pressure. When you wick down like that and the body is down, it's like, nope, this is not going to be a trend reversal. It's not going to go, it's not going to go up, back test, and away. No, it's not, because you wicked on the 195. So, as you're looking at the 65 minute, but again, if you're looking even the 65 minute, you notice how it's just straddling that line, and it's not what you want to look for is conclusive, like similar to something like this, where it just goes up, successfully back test the line, and then away. This is kind of just, well, I'm just meandering and straddling the line. And remember, straddling, to me, my definition of straddling the EMA, uh-uh, that's not good. That's not good. You can straddle the support lines like this black line, but not the EMA. No, 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 no. That's taboo. So, and the 195 also really confirms it. See, it leads up to that, and then boom, falls even more. So, you know, I guess if you practice patience and you're just waiting for it, just like, no, I need to see the 195. Show me something. Show me more. Show me more. Um, it's what I would look for is something like this. Get bigger candle bodies. These are small little bodies, small skinny bodies. That shows indecision to me. Well, that shows lack of conviction. You need big bodies, whether it's red or green, like this. See, that's big. That's like, oh, that's huge selling pressure. Or a bigger body like this and this, that's bigger buying. That's a little bit bigger. But these short, skinny bodies, that's not very, that doesn't show a lot of conviction to me. Okay. So basically what I'm saying is, had you sold the call, remember this was going up and then it just dropped straight down. Sold the call, buy the put, and you just held it using the 195 and the 65 rules, like, okay, these bodies shouldn't be straddling the EMA, and on top of that, these bodies are kind of small and they're below the EMA 50 on the 195, right? And then it finally just wicked down. It's like, oh no, I'm gonna hold it, right? You could have bought it up here and you held it. Oh my, how many days is this? Ooh, that's like 2 weeks. You know, you're holding it for at least 2 weeks. Okay, so okay, it works. Um, now let's see on 928. Yeah, 913 to about 928. It's really trying to carve out a bottom now. Okay, see this black line? Oh yeah, okay. This is why. See, this is no coincidence. See this black line and the EMA 50 and the SMA 20, they are converging. This is a very important zone. This zone. That's when you have resistance lines, EMA and SMA converging on each other. Look at that. That's why it's hanging around right in here. It's flattening out, right? Or at least it's trying to. Okay. So just start to really, and including on top of that, these bodies actually went up above the EMA 50. What was that on 928? Let's have a look. 928. Ah, okay. On the 65, the candle bodies on an hourly basis, since 65 minutes is an hour, they closed above the EMA 50. So you're thinking, oh, is this a trend reversal? Yes or no? Let's go down here and look on that day. Look at the 95s. Well, look at the 95 tells you. It went up, didn't even touch or kiss the EMA 50. It starts to, the candle bodies start to flatten out, and come back down. So that tells you, no, it's it's not it's not ready. It's not time. See, it's basically like a head fake. Came up. Oh, look at that. These are these are 100. Yeah, this is a head fake. It came back down. Another way to look at it is, okay, if you're using the traditional rules we've been discussing on this channel, the bodies are closing up, but wait for the back test. And the back test, what happened? Failed. See? It failed right there. And down further we go. See that? So, but it also confirmed, let's see. Yeah, the MACD did go above zero. Yeah, you know, but the 195 never did confirm for you. See, the 195 is still below zero, but the 195 stayed below the EMA. This is not a trend change. Okay, see that? See what I mean? This is not a trend change. So if you're patient and you're like, no, it's got to, I need to see more on the 195. I need to see that wick actually bust through and maybe the head of the candle body do a little peekaboo above that to even start to suggest a trend change. Okay, like you see here, that starts to suggest one. Okay, I'll comment on that in a minute. But so anyways, so that's that scenario. See, it did go up clear bodies above the EMA 50, but the back test failed. Right? For it to do a trend change, it's got to go up, clear body, clear candle bodies, back test, bounce off of the EMA 50, and then up we go. That's a trend change. Okay? All right. So, you know, okay, so this is 10.3 to 10.5. Here we go. Here we go. See, so this is looking encouraging, right? It's like, oh, it broke above it. It's hovering, not straddling, not straddling, hovering above it, above the EMA 50. It is clearing it, and then it goes even higher, right? You're like, whoa, ooh. But see, that makes sense though. We've been falling for 2 weeks, okay? That makes sense. That it's like it's got to be time to try to do something about this, right? It just can't go down in a straight line like that. So this is not terribly surprising. It just what's surprising is how long, how much time has gone by that we've gone down like this. See, so okay, so let's check out 10.3 to 10.5 down here. Here we go. 10.3 to 10.5. So, yeah, using the I would probably think about getting out, you know, especially if it's closing hourly bodies above the EMA 50. I mean, if you'd have bought the short from up here, you're still okay. You'd have still made good money, right? So, yeah, as soon as you start seeing hourly 65-minute candle bodies closing above the EMA 50, sell it. Just sell it. Even though it actually went up for a few days. Uh, consider this an up day. 1, 2, 3, 4 days. That's almost a week. So to me, that's you know, I, that's worth swing trading, right? So there's where you would sell your puts as soon as you saw this candle, this hourly candle, uh, uh, above the EMA 50. Sell your put that you would have bought from up here, right? And then get calls. You know what I mean? Go ahead and get calls. Now, this this would concern me a little bit because the body is straddling the two bodies, 2 hours worth. Well, we'll just say one. That red candle right there is actually straddling the EMA 50. I'm like, ooh, uh, that's suggestive of some weakness because ultimately, see that? It seems to be getting weaker and weaker and weaker. Not only that, look at the MACD here. MACD is going down and down and down and down. Ultimately, it did go down. See that? But the first warning shot already happened here. This red candle is going right through the line. Okay. Um, so that's interesting. I would consider that a warning shot. That although it did go up, maybe think about sell, you know. Okay. So what well, this was on 10.5. Let's see here. Okay, well the 195 the bottom of the candle, it just kissed the EMA 50, but it didn't close below it. But 195 is a much bigger time frame. 10.5. Yeah. So, but when you look at this though, see this? Okay, you see how on the 195 the prices are basically flat to maybe even slightly, ever so slightly going up, maybe. But look at the RSI. It's going down. The top of the RSI. See that's already giving you clues like it's going to fall, right? It just does. Let's see what. Yeah, here we go. Yeah, see here earlier when I talked about that candle, the warning shot right here, the red candle that's going through the EMA 50, the red candle body. Look at the RSI, lower and lower and lower and lower. So in addition to the MACD, lower and lower and lower, that's a warning sign. You need to close your position. If you got calls, you need to close it. Just go ahead and close it. It's getting lower and lower. I I I almost never see it go lower, 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 and then all of a sudden up. No, I don't see that. It's I always see the divergences complete themselves. Lower, 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 fall. I don't see it go lower, 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 oop, up. No. No, I don't see that. So, okay, so um yeah, so that's that scenario. Let's go ahead and so that was 10. Go ahead and complete out the oops, let's see what I got here. 10.3, 9.30. Okay, that's fine. Okay. Yeah, that was the scenario, I think, that I just described. Or was it? Let's see. Oh yeah, 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 yeah. That right here. See that? That's what I was talking about. The that red candle straddles the EMA 50. That's the warning shot. Like, that looks weak to me, right? And sure enough, the MACD is going down and down and down. RSI is going down and down. So just always be looking. Like, what are the candle bodies doing? That's ultimately at the end of the day what I'm referring to is pay attention to the candle bodies. What are they doing? Are they above or below the EMA 50? Right? That's maybe the long and short of it. But confirm your observations with the MACD movement and direction and the RSI movement and direction. Okay. Okay. So moving on. Final scenario. See that? It's going down, 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 and then boop, fall. So close if you bought calls. Right here when you're like, ooh, I see candle bodies closing above the EMA 50. You bought calls. As soon as you saw that, even though it may have bounced back up, I'd be like, I'd think about selling because look what happened the next day. Look at that big, huge wick down. That's big selling pressure. See that? Big selling pressure. That's like, that's another warning shot. You need to get out. It basically opened up as a head fake for people to get calls, right? They thought, Oh, it's up, down, up, up. It was a head fake. That big wick down. It's like, uh-oh, you already got the warning shot right here. You got another warning shot right here. Even though it's kind of coming back up, you need to get out. Don't hold out. Don't hold out. Don't get in. Don't buy into the hopium. Like, oh, maybe it's gonna go back up. No, I'd get out. Get out. Okay. Sell your calls that you'd have perhaps bought here when you saw the first candle body open. Sell it and then buy puts. And had you done that, you'd have been rewarded for the next 1, 2, 3, 4 days, right? So when you're swing trading, it's like if you're getting your timing right, you sell one thing and you buy the other instantly, back to back. That's what you do. Okay. So um, see, look at that fall, and then once and then once again the MACD goes way down below zero, way down. Like, oh, it has nothing. It's got no strength whatsoever, evidenced once again. Look at that. Down, 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 down below the EMA 50 on the 195. I mean, it's just so weak. And once again, look at the size of the candle bodies. It's just weak, right? It's like, ugh, it doesn't have it. Okay. Okay, here we go. Here's what I was talking about. 1013. I was talking about that earlier. So essentially, we have been falling. Oh, overall, right? The overall downtrend has been falling since, oh my gosh, right? Like up here, 913, 913, and now we're sitting here at 1013, a month, right? We've had some swing opportunities to go up, but overall, the trend was down, right? There was no trend reversal, right? Because there was a head fake here. That's a thought it was going to be a trend reversal, only to go down even lower because this point is lower than this point, your starting point. Okay, so here's what I meant when I said, okay, now you have a potential for a V bounce because we have just been falling and falling and falling, and it's trying to consolidate, fall 500 points in pre-market, bounce up plus 800 something points, almost 1500 point swing. I'm not surprised. So it's, because we've been falling and falling and falling. And look at this. Look at the MACD here. Look at the MACD leading up to the 1013 negative 500 pre-market. When this is when CPI came out red hot. But the MACD was already, see, look at this. The MACD was already coming up and up and up and up and up. This was just a little speed bump, a little hiccup, because the MACD, if you exclude this speed bump, look at that. It's a trend continuation. It was already going up. And if you just keep following the MACD like this, look, it's gone up and up and up, right? Except for this. What's this? 28. Oh, this was Thursday. This was last Thursday. Yeah, that was last Thursday. See that? When we basically when we kissed this line, which goes back to damn near the 1013 date, 1013, 1014 date. We kissed it, but we bounced. Okay, so um, anyways, so that's basically what do we got here. Let me make this a little bit bigger, just so it's easier to look at. There we go. Yeah, here we go. There's the 1013. Is that right? Yeah. 1013. See how far, again, look at how far down below this is, below the EMA 50. That's so weak. However, even the MACD 195, it's going up and up and up and up, even though that's going down and down and down. That's proof positive it's going to, um, it's trying to bottom. It's going to go up. This is not, you see this pattern, this is not a time to be shorting. Do not short that, right? you see the MACD actually starting to curl up on both time frames like this, do not short it. Full stop. Don't do it. You're gonna get the tape turned on you. There's going to be a massive short squeeze coming. I guarantee it. Don't short it. When you start seeing the MACDs going up while the price is going down. If the price is going down and the MACD is going down, okay, you like this. Price is kind of going down, MACD is going down. Okay, I could probably short that. Think about shorting that, right? But don't short it when you see bullish divergence on the MACD. Do not do that. Okay? You will be sorry if you did. Okay. What else? So this was 1013. That was CPI. Flash crash, but flash rip. I mean, huge gamma squeeze. I just sat there with my jaw dropped like, whoa. Okay. So, but looking back, reflecting back, we shouldn't be surprised. Um, because look at that. It was already trending up anyways. After being falling for a month overall, we shouldn't be surprised. We shouldn't be surprised the market did that. It was the markets had already decided 3, 4 days earlier, 1, 2, 3 days earlier, the MACD was going to start going up. You know what I mean? It's like it already decided what it's going to do. And lo and behold, the trend has been up ever since. Look at that. The trend has been up. The trend is overall, it's been up, not down. So we have the bottom of the bowl, which I believe is right here, 1013. That's what I said earlier in the presentation. I think 1013 will likely prove to be the bottom for 2022. It's not the bottom for 2023 though, but for 2022, we'll see. I think that could all change this Wednesday when Chair Powell speaks at 2:30 to comment on the FOMC and the press meeting to comment on the rate hikes, the future of rate hikes. If he still sounds hawkish, oh yeah, I think we're going down. I think we're going down further. So, um, but if he's kind of dovish, or if he does say there's some pivot going on, which I I think he he just may, then then if he does sound a little dovish, I think that is going to be the bottom for 2022 on 1013 this day. Okay. So, so as you see here, so for the entire month of September 13th through, we'll just say 1013. Okay, we'll just call it that for sake of discussion. 913 to 1013 overall was down, with just a couple days with candle bodies closing above the EMA 50, right? Just a couple days, like this one here. A few days, a couple days. But overall, the vast majority of the days, the candle bodies were below, right? Um, but now look at the difference after 1013. Look at how many days candle bodies were closing above the EMA 50. See that? That's just crazy. Okay? So, you know, when you're in a general uptrend like this, I don't know. I mean, I guess you could try to short. Yeah, you would make some money swing trading on the short side, like this right up here versus this down here. That's money. Let's see if you could call the top based on the signals. Yes, you can. See it right here. Let's let's here's an example. Look at the RSI. See that? It's going down. It's going down. Even though the price is going up, it's going up. It's going down. You need to think about getting out of there. Sell your sell your call, that you possibly now. Okay, hold on a second. So this is when it reversed and the candle bodies are clearly going above. And this was the following day. Yeah, this was the following day. But I would contend that something happened on that day. I don't remember why. It just seems to have reversed itself. Only to, only to basically like continue the trend right here. See that? The next day. I don't remember what happened on that day. 9, 10, 14, 10, 14. I don't remember what happened. But if you look at the MACD, okay, to put it in perspective, yeah. So it ripped up 1,500 points in one day. But the next day it ripped back down. But look at the higher low here compared to here. And the MACD here compared to here. And the RSI here compared to here. It's a higher low. Yes. Even though that was an ugly, ugly following next day, everyone's like, "Oh, see, there's no follow through," right? Everybody heard that in the media. Oh, there's no follow through, right? Oh, you swung 1,800, 1,500 points in one day. Following day, you gapped and crapped. But that was a higher low here and there, even on the 195, and even on the 65. See, that's a higher low. And when you look at the MACD, not only is it a higher low, it's trend continuation. See that? Overall, it's going up. It's going up. It's trend continuation. So, so, you know, these are just volatile times. So, if you're trying to swing trade that, boy, it would have been very tempting to sell the following day, wouldn't it? You know what I mean? Because you're like, whoa, is this just another gap and crap like we've been experiencing like all year? You know what I mean? Um, but if you're kind of you've been following the trend since September 13th. It's been falling. It's got to try to base out, right? It just has to. It can't just keep falling, falling, falling like that, like it has been. So it's got to base out. And the 195 did suggest that. It's like, but the MACD's trending up now. You know what I mean? So this one would have been tough even for me if I were to swing trade that. Now, since I'm day trading, I would have been looking at the lower time frames, not the upper time frames. Um, but anyways, you know, if the following day though you see, whoa, we are gapping up, right? If even though it came down as made a higher low, and then the following day, whoa, we're up, and candle bodies are closing up, up, up. Okay, I can see that being a buy opportunity. However, look what happens. I don't remember what happened this day, but it did go up all the way up in pre-markets, and then it dumped. And I don't remember why. Was it? No, that's too early for earnings season. Maybe something came out, something happened in the news. I don't, or what it can be doing. Maybe nothing happened actually. Okay, let me point this out. That's a higher low than that. What it could be doing is just up, consolidate, 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 consolidate. That is a higher low than that. You see what I mean? It just could be consolidating, nothing more, right? It it it's basically trying to build out a base. Higher low, higher low, higher low. Try to reverse the downtrend that's been happening for a month. So it's because it wouldn't be healthy if it was a true V-shaped bounce, like boom, boom. Oh no, that's not. When you try to truly carve out a bottom That's what you're really trying to do. So it's tough for me to, yeah, when you're kind of at or near the bottom, swing trading is kind of tough, right? It's tough because you're in a you're trading in a zone. See that? That's where I drew this red line and the black line. You're in a zone. Trading in, sorry, not a zone, a range. That's what I meant to say. You're trading in a range. It's a little bit tougher. It's tougher when you're at or near the bottom versus clear down versus clear up, right? Yeah, it's tougher to swing trade a bottom. That I think a bottom is better when you're talking about range trading. That's better for day traders, right? I think it's better for day traders. So, but I think we are at the beginning of an upswing. So we're not. Yeah, I see that. I mean, we're clearly moving up above this range. Kind of came back down into the range, but now I think we're going to move up. We're at the beginning of an uptrend. So, but all that can change come Wednesday at the press meeting. Chair Powell. Okay, one last thing I want to show you is how do I draw trend lines? As you saw, you know, here's a trend line, here's another red trend line, here's another black trend line. How do I draw it? You know, I'll be honest with you, it's actually deceptively simple. So this is the last 2 years of TQQQ daily. This is the daily. Um, I'm going to call your attention to something. All right, watch this. I'm going to choose this right here, all the way back in 2000, okay? On June 12th, 2020, right? I'm going to draw right here. Oops, right there. See that? 2 years ago. Let's look to the far right. Oh, look, will you look at that? Okay, so the moral of this story is trend lines have been established months or years ago. You don't have to spend a lot of time worrying about all the little trend lines that are developing in the last 2 months or whatever, or the last week. They've already been set months or years ago. Watch this. Oops. Hold on, let me draw another trend line here. Right? It makes sense where I drew it because I'm just looking at the bottoms of something, right? Bottom or top, whatever. Okay, so I drew two trend lines. Let's zoom on in the last 6 months. Okay, so that's TQQQ. So this is the daily chart. See, notice how I drew it, how it fits with certain candle bodies. See that? You can see it. You can see how they fit perfectly. And I drew this from 2 years ago from using that perspective. I didn't draw it from this present day perspective, right? So um, that's how I draw trend lines. I just kind of draw them once. Don't feel like you got to draw all the lines all the way up there. And it's like, it's gonna be a while till we get all the way up here, so you don't need to spend too much time messing with this. Just just spend time drawing all the lines in the zone that we're trading. You know, a little bit above it, a little bit below it, but you don't have to be spending all kinds of time um, drawing trend lines. But so if you're trying to trade SPY, you see other stocks channels talk about that. Oh, SPY 360, 365, 370. Yeah, I bet I know where you got those trend lines. You just looked at the daily charts from 2 years ago and just drew the lines. Okay. See, look at that. Let's see. Is this here? 616. Look at the June low. I drew this line from 2 years ago. Remember that? I drew this line. Look at that. That happens to be the June low. See? So you can predict where the trend lines are going to be. Just pull up the daily, go back 2 years, 3 years, 4 years, whatever. and start drawing them out. Draw them out from the perspective of 2 years ago, from the past. Don't look at the present. Look at the past and draw it out from there. And it will line up perfectly with the present. Okay? So if you're trading SPY, in this case it's TQQQ, but if you're trading SPY, I don't remember what the June low was for SPY since I don't trade SPY at 36, 366? I can't remember. I just know June 16th is the date for all markets. Okay. If you want to go a little bit more granular, I recommend going the 195 or the 4 hour and check out the trend lines. Here, let me. That's a little bit clustery. So you could consider drawing trend lines on the 195, but I wouldn't go any more granular than that. Go daily, which is what 6.5 hours, right? 6.5 hours, and the 195, which is 3 hours 15 minutes. That's I wouldn't go any more granular than that. Okay, I don't recommend it because I think any more than that, now you might have too many lines, right? And I mean, this already is good enough for me. Like I don't need another line right in the middle of that because, as you know, I'm more off of the EMA and SMA and the Bollinger Bands. I don't really look at support resistance lines very much. I need them there for just situational awareness, right? Like when the scenarios when I say, oh, the EMA, the SMA, and the support line is all converging. That's an important zone, right? Okay, so it is important. I'm not saying it's not important, but to me, just these two lines is good enough for me. But to each his own. Everyone's a little bit different. So, anyways, that's all I've got for you guys today. Hope you guys benefited from it. I will talk to you again soon. Talk to you later.